Today we're going to take a closer look at Netflix. The company just reported earnings and they shared a lot of great information in their shareholder letter. At the moment it does seem like earnings were a lot better than expected as the stock price is up a nice amount after hours. If this is your first time here, make sure to hit the thumbs up, make sure to hit the subscribe button, check out the pinned comment for a lot of great links, my Discord channel, and also my new tech channel. So let's get started.
I do want to thank The Motley Fool for sponsoring this video, and make sure to check out fool.com/Jose to get the top 10 stocks to buy right now.
So if we take a closer look at price performance, Netflix today ended the day up 5.6% as the overall tech market was pretty bullish. I hope it continues. After hours, the company is actually up about 6.8% as earnings weren't as bad as expected. For those that follow Netflix, they were expecting a loss of about 2 million subscribers. Luckily for the stock, it was nowhere near that. Unfortunately, they still lost some subscribers, and they did share a little bit of how the kind of strong dollar is affecting companies that depend on international revenue like Netflix. Instead of losing that 2 million subscribers, they lost roughly 970,000 subscribers. They do mention that foreign exchange was worse than expected due to a stronger US dollar, resulting in a 9% revenue growth. If constant currency was applied, it would be a 13% growth. A quick look at their forecast for the upcoming quarter 3 of 2022. They expect revenue year-over-year growth to be about 4.7%. That is pretty low and will be the lowest the company has ever seen. They are seeing a bit of a hit in operating margins. Again, most of this is due to the overall strong US dollar. Unlike quarter 2, for quarter 3, they do expect a growth in subscribers by about 1 million. And I do believe these are the two main reasons the stock price is up right now. One, their overall quarter 2 results were a lot better than expected, so that's good news. Even though they were still somewhat bad, right? Losing subscribers is always a bad news. The second part of good news is for quarter 3, they expect a growth in subscribers again. On a constant currency, the APAC region revenue grew 23% year over year at over $900 million of revenue, and now this is approaching the size of the Latin America business. In this region, the APAC, they added about 1.1 million paid subscribers. This is where most of the growth is coming right now. One thing you are going to notice in their shareholder letter is excluding FX, so this is kind of on a constant currency base. We can see, unfortunately, this company is definitely getting hit hard with the strong dollar at the moment. In Europe, Middle East, and Africa, revenue and average revenue per member increased 13% and 16% year over year, respectively. Unfortunately, they did see about 800,000 subscribers lost in this region. Revenue in Latin America grew 19% year over year, again, excluding FX. But it did surpass the 1 billion quarterly mark for the first time. Paid members in this area were pretty much flat. If we take a closer look at United States, Canada, and North America region, we can see average revenue per member and revenue each increased 10% year over year. I'm pretty sure it's due to all those price hikes we're seeing on our subscriptions. Unfortunately, this is another region where they lost a nice amount of subscribers, roughly 1.3 million. We already talked a little bit about their quarter 3 forecast. Just a reminder, they are expecting about a 1 million subscriber growth next quarter. Like I mentioned, the strength of the United States dollar is providing a significant headwind for all multinational US companies, especially like Netflix, which nearly 60% of their revenue comes from outside the United States. So this is probably something that in the short term Netflix investors might have to worry a little bit more, and I wonder how many kind of analysts are going to come out and start using this as a reason to kind of continue to downgrade and decrease the price target of Netflix. So I do believe this kind of strong US dollar could definitely have some more impact in the volatility of Netflix stock price. For example, their quarter 3 revenue, which is only a forecast of 5% growth, if there was a constant currency basis, it would be a 12% year over year growth. I do want to say, while I'm reading this shareholder, sometimes I see it like, hey, this is an excuse for why our numbers are not great. But at the same time, I do want to say that's the risk that you have as a company that gets a good portion of your revenue outside the United States. So this is something that always needs to be kind of accounted for, and that's something I believe that you can kind of use as a scapegoat. Today, they also announced that they will be acquiring a leading animation studio Animal Logic, and together they want to create an animation studio that will produce some of the largest animated feature films. They are going to fund the purchase with their existing cash balance. So there have been a nice amount of animated Netflix originals that have done really well on their platforms. And to me, it seems like they want to focus on somehow becoming like the next Pixar. For those not familiar with Animal Logic, some of the films have been Peter Rabbit 2, The Lego Movie 2, Captain Marvel, Peter Rabbit, the Lego Ninja Go movie, and many others. Netflix is really showcasing and flexing their overall strength right now. They do mention that they drew more TV viewing time than any other outlet during the 2021 to 2022 TV season. We can see Netflix is way above CBS, NBC, ABC, Fox, Disney Plus in general. They also announced that later this week, Nielsen, and you guys have most likely seen their reports where they share kind of the streaming market share versus US TV time, and they gave us a little bit of a preview here. Netflix share of US TV viewing reached an all-time high of 7.7% in June versus 6.6% a year ago. So they're definitely growing their market share of TV viewing time here in the United States. Kind of focus a little bit in their gaming side. They do mention that they're adding games every few weeks, with the portfolio growing to a current total of 24. That's actually a nice amount, and they had millions of their members play games through the service, and they are learning what game works for different audiences. They do mention that they have made a few acquisitions in the past year for here on the gaming side, and they are going to continue to invest. Next, probably the point that everybody wanted to learn a little bit more is their ad tier system. So advertisement is expected to start off in the early part of 2023, and they will likely start in a handful of markets where advertisement spend is significant. So I do believe it's going to happen here in North America, especially in the United States, as this is where a good bulk of kind of advertisement is spent at the moment. They are also working on ways to kind of combat that account sharing that they're seeing right now, but they do mention that they are in early stages and they haven't really kind of found a true solution at the moment, but they're constantly trying and constantly finding new ways to kind of combat this. If we take a closer look at their cash flow and capital structure, they mentioned this previously and they're kind of reiterating that now they are self-funded. For the full year of 2022, they expect free cash flow to be approximately $1 billion, plus or minus a few $100 million. Again, assuming no major changes in currency changes. They also expect annual positive free cash flow going forward, with substantial growth in 2023 versus 2022. Currently, they have about $14.3 billion in debt, and that is within their guidance. They want to be somewhere between 10 to 15, so they are on the higher side. They do have about $5.8 billion in cash. And they do mention that roughly this is a company that wants to have 2 months of revenue in cash, so that's roughly about $5.3 billion. So right now they have about 5.8, so they're definitely meeting that requirement that they have set for themselves. Their first priority for cash is to reinvest in their core businesses and to fund new growth opportunities like gaming, followed by selective acquisitions. After meeting those needs, their intent is to return excess cash to shareholders through share buybacks. So at the end of the day, I do believe earnings were a bit better than expected. To me, my biggest red flag is that kind of dependency of currency exchange and kind of using it a little bit as a scapegoat. Sometimes I'm not a fan of how companies try to find a scapegoat on certain of their results. So I hope you guys enjoyed today's episode. Take care, have a good day, and see you next time.